Russia's economy takes a turn for the worst. Impending oil crisis. The Russian economy has taken a turn for the worst over the past few months. After showing some early resilience in light of the economic sanctions imposed by the United States and the European Union, its ability to trade with other countries being significantly reduced is having a severe effect on the nation's economy. Furthermore, it will be experiencing declines in oil and gas production according to projections which, if accurate, will cause additional problems for its economy as a whole. With many critical exporting resources being repriced at lower levels, such as oil, it is evident that things are only getting worse for Russia. Hi, and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we delve into the topic, make sure to hit like, subscribe, and turn on the notification bell to stay up to date on our videos. Without further ado, let's head on to the video. People all across the world, whether they are located in Europe, America, China, or even South America, have been bracing themselves for significant economic shock since the start of Russia's invasion in Ukraine. We have all been anticipating significant and far-reaching effects on our financial situation. With Russian oil sales projections falling, the damage to the Russian economy is now starting to intensify. The outlook for exporting other natural resources is also pretty bleak. All of this is occurring as the prices of key resources drop, jeopardizing Russia's financial security and stability. Russia maintained and even grew the amount of revenue throughout most of 2022 by generating oil and natural gas. Despite the higher prices, Russia continued to sell the same quantity of these resources. But those days are numbered and gone. In terms of oil, Russia's future is not that promising. Oil export restrictions on Russia have already been imposed, and they are set to be significantly increased. On December 5, the EU and the G7 put in place a stronger and much stricter ban on Russian crude oil. 2 months later, on February 5, a second ban on Russian petroleum products will go into effect. In 1 week, it will be illegal for the majority of market players to purchase Russian oil, something that has been done regularly every single day for almost 50 years. Since Russia's invasion of Ukraine last February, this idea has been established for a while. But it has taken even longer for all of the nations to agree on how to implement it and make sure that there won't be any significant issues for Europe when this rule takes effect. Since the practicalities and conditions underlying the ban have not yet been fully understood and prepared for, it will take another 2 months before it takes effect. The G7 is now likely to impose a price cap on Russian oil that is exchanged between third parties in other parts of the world in addition to this ban. It will probably succeed by making use of the West's tremendous influence in global logistics and industry. Basically, laws will mandate that oil may only be purchased below a specific level and that anybody or any entity that transacts oil over that level is banned from offering services related to maritime transport. They can pay whatever price they choose for the oil, but if they pay too much, their business and any others that are found to be directly linked to them will be barred from Western shipping ports, refineries, and other necessities for the oil trade. This might not seem like a big thing, but if the G7 wants to fully execute it, it's likely to be really successful. According to the reports, this price cap level will be between $65 and $70, or $15 to $20 less than the price of oil on the free market. Due to the necessity for oil, Europe will be impacted by these regulations and will need to find alternative supplies. But they've had a long time to figure out how to do it, and the markets have fully priced in this change over the past few months. As a result, it's unlikely that this will create any changes or increases in oil prices in Europe, and any that do occur would almost definitely be relatively minor. This policy's intent is to have an impact on Russia, and it probably will. Once the regulations go into force, the International Energy Agency anticipates that Russia will find it challenging to find new markets for its oil. As time goes on, the policy may even cause Russia's national output to fall below 10 million barrels per day. With COVID-19 being a significant contributor to the record low level of Russian crude oil exports over the past few years, the sanctions have only worsened the issue. The Russian state will likely get less revenue as a result of these regulations and the new sanctions. Now, a lot of people are wondering exactly how crucial oil is to Russia. But when it comes to oil, Russia is a far greater participant in the global arena, and its economy is also much smaller than the UK's. Therefore, oil is crucial to Russia's economy, citizens, and government. Russia is the fourth largest exporting area in the world and the third largest producer of oil in the world, accounting for around 12% of global output. In other words, the value of oil to Russia ranges from 5 to 15% of its GDP, or from 1 to 300 billion US dollars annually. As the invasion completely took the West by surprise and was mainly unforeseen, 2022 has gone reasonably well for Russia's oil and gas industries. Thus, the infrastructure needed to appropriately sanction Russia was simply lacking. But over the last year, Europe and the West have made significant strides in this area, and governments have made it evident that they believe now is the time to act, as indicated by the fact that these new regulations have been discussed for months, yet have only now been implemented. Numerous analysts contend that since Russia can just sell its oil elsewhere, there won't ultimately be any issues. After all, they have already begun sending an additional 1 million barrels per day to Turkey, China, and India in 2022. So they'll either ship more or look for new consumers in Asia. However, there is a fundamental issue with that notion. The truth is that Russia has run out of alternatives since these consumers don't genuinely need Russian oil, and if they did, it would put them at odds with the rest of the West. Therefore, they require incentives to purchase oil from Russia, and those incentives take the shape of a reduction in the price of Russian oil. To make matters worse, China and India won't be purchasing this oil in the future since they won't be using it. Thus, the discount will only grow. They would buy it with the intention of saving it for a rainy day. Additionally, as their reserves increase, their need for Russian oil will diminish, which will have a negative impact on the price they are ready to pay. In addition, Russia will have more oil to sell when Europe's restriction on purchasing Russian oil takes effect, flooding the market with supplies. Moreover, the G7 regulation setting a price cap on Russian oil for third-party nations would have a very similar impact. It should be plainly evident that Russia's oil sector can't depend on its current profitability indefinitely. As Bloomberg and the International Energy Agency predict, Russia may find it challenging to find new markets for its oil, and that the European import restriction may cause the country's average output to fall below 10 million barrels per day by the end of the next year. All of this is true even without taking into account or discussing the other reasons that are already severely harming Russia's economy. The fact that 100,000 working-age males have lost their lives in the war, and an additional 700,000 are said to have fled the nation, means there are fewer people working, paying taxes, and stimulating the economy. In reality, hundreds of people are dying on both sides, and little progress is being made every day. However, both sides' results are still quite strong. It is baffling to say the least how anyone can hope for a rapid resolution to this conflict. This indicates that East-West tensions will persist and probably worsen. The current restrictions will continue and worsen, which implies that energy imports and exports will either remain unclear or non-existent altogether. Thanks for making it to the end of this video. If you enjoyed it, please hit like and subscribe as it would help us extend our reach to many audiences. Also, make sure to leave your thoughts in the comment section down below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you in the next video.